Hello, welcome back to CMD Oral Skills Forex lesson. This is a weekly forecast on DXY, and this is what we do every week. If only you have been following us on this social media platforms. We won't waste much time. Last week we did analysis, and that was on 20th January 2024. Right, and then in that review or the forecast, it actually began from here, right? The fourth week, initial setup 2020th, and then in that forecast, we said that we looked at the fact that the prices were below this support trend line, right? Price had just broken below it here, right? And then because we said price has just broken below that resistance level, anything was bound to happen, right? Normally, if price break below or just above a trend line or support line, anything is bound to happen. Either it continues in that sense, or it what? It will pull back, right? Or in fact, actually reverse. So in the same review, we saw something here that even after breaking below, right, the price began to what? Range within this fair value gap. Now, we told you that this fair value gap was a bearish one for that matter, right? If you should take this review back for a period of time, you realize that it's actually a fair value gap, or better, so going on the higher time frame, you see that we looked at that. We looked at in the recent week, right? So that was what it said. Now, when price broke below this resistance trend line, better so the support trend line, price didn't go or move away too far, right? So price were just ranging. And then we saw the fact that price, after breaking that, it was ranging within the fair value gap. The fair value gap. It didn't break above or below, right? Prices did not break above or below. It ranged or consolidated in this fair value gap. Now, in my analysis, I told you that because prices were just around the support line, and then and for that matter, within the fair value gap, what we were expecting, or the advice that I gave was you should be what? Patient, and then actually allow this price to move out completely before you can actually decide to take a trade. And I also said that if, let's say, you were already in a trade or in some trades, then there's no need for you to exit them, because let's say you were in a buy or in a sell, market could move in any way. I don't want a situation whereby you feel regret, because before you enter a trade, you actually take into consideration your risk management, right? So I don't want a situation whereby you enter a trade and all of a sudden, when prices start to move in the opposite direction, then you pull out because you are afraid. That is not how we should be trading. So I advise that you leave the trades, you just run. So that was what I advised. Now, looking at that in the course of the week, this is how price moved. It was consolidating. Now, within this consolidation, right, this consolidation, I can see that if you're a scalper, right, if you're a scalper, I am not a scalper. So if you're a scalper, you would actually enjoy from this, because I know someone who is actually watching this video might say that, oh, even though it was ranging within some fair value gap, the spaces were quite wide, so you could actually benefit from this. No problem. If you are that type or a scalper, then it can actually benefit, especially on the lower time frames, right? In the 30 minutes and the 15 minutes, maybe 5 minutes, you actually enjoy. But I am a day trader, a swinger, so something like this, I wouldn't actually bet a lot on this, or better still, risk much in such a trade. I could be trading within that time frame, but I wouldn't go in my normal lot size or the risk level that I take in most of my trade. I won't do this. I like I'm in fact I'm a breakout trader, right? I love breakouts because breakouts actually gives you that momentum, right? To actually enjoy the market without looking back, or without any problem or fear, right? So this is what I do. So such a trade, it doesn't mean in this consolidation I didn't trade or something. I did. I incurred some losses and then some profits. You see, but in this profession, my target is creating higher probability setups. That is what I do, right? So it could be that some setups will be there, and I'll ask you not to actually enter them. Maybe you're a newbie, or because I want you to believe in my system, I wouldn't let you to be risking anyhow, right? So that is my point. It doesn't mean you cannot trade this. This is tradable, especially if you are. Some people have their strategy to be consolidating traders. They trade within consolidations. I don't. That is not my style. I like. In fact, I love breakouts. So that will give me the momentum to actually enter the market with much confidence. So that is it. So you could actually benefit from this consolidation, or better say, you just stay away. So this is what actually happened. So I told you, wait for the price to actually break out of this. If it doesn't break out, please be patient. So if you realize, if you are actually following this and you were not in the trade already, that means you have to wait the whole week, because the whole week this will happen, right? When it got here, it's give us a fake out. So this fake out, you could think, oh, okay, price is what has broken out, so I can go in massively by buying this XXX stroke USD first, right? Because it is what selling. So if it's selling, that means any XXX stroke USD would be what buying. So you would what enter the market with more confidence. But then when it gets here, this is what happened. It bounced back again and then entered back into the fair value gap, or better still, the consolidating channel. So this is what happened in the course of the week, right? So I told you to wait, and then that. So if you didn't wait and you traded, I know you may incur some losses, or so better to get some profits. But I believe in trading high probability setups. So that is what the review for the recent week, last week. Now we are moving on to this week, right? So this video or this analysis is being recorded on the 27th January, right? It's actually Saturday. So I do my analysis within the weekend, sorry. Within the weekend, then I can have time to post, and then you can watch, do your review. In fact, compare them to your analysis or whatever, then you can what? Zoom into the market. I'm not saying my analysis is the best. If any trader or any tutor tells you that their analysis is the best, that person, you should in fact run away from such people. They are liars, right? They can't be 100% correct, but we only trade higher probability setups. So whatever I say, I am not forcing you, but I'm saying that compare this with your analysis, because so far within this year, I have done this will be the fifth analysis. Just compare them, and then you watch the initial setup. Then at the end of the week or the weekend, just compare them. Go back to watch the video, or even in the course of the week, be watching the video and then comparing it to the current market, and see whatever I said, is it true or not. So that is what I do. So now, Now, in this week, in fact, this week, 27th January 2024, my general overview is I'm expecting a bullish week for DXY, a bullish week for DXY, a bullish week for the what DXY. I will explain this or I'll prove this to you in the higher time frames, right? In the higher time frames, I'll prove this to you. So generally, I am expecting a bullish uh, week. Yet you have to do this with caution and proper risk management. So that is it. Now, let's look at it by doing the top-down analysis once again. So I told you the other time that I could even do the analysis, the top-down analysis without the weekly time frame, right? Without the weekly time frame. But because it's a weekly time frame, I will just include it and then we do that. So if you look here, right? Sorry if my background looks a bit messy. So this is what is happening here, right? So if it looks a bit messy, but just have it. That's what I've zoomed in, right? So if you look at the weekly time frame, you can see that we have what a morning star candlestick pattern here, a morning star candlestick pattern here, and the morning star candlestick pattern is actually a bullish what? A bullish pattern, right? These three candlesticks here, a bullish candlestick pattern. And then even after this candlestick pattern, right, we can see that there's a big bullish candlestick here, in fact, a large one. And then the current one that we are on is also bullish, right? And then even this candlestick is what? Currently found in the fair value gap here, right? And I told you this fair value gap is bearish. Even though it's bearish, right? The candlestick forming here, the candlestick currently forming here is what? It's bullish in nature, right? So I have much confidence that this candlestick pattern, or in fact, this current candlestick, the next one, that's in fact next week, or let's say Monday, the candlestick that's going to form would actually break this fair value gap, the bearish fair value gap. I have that confidence. I'm not saying 100% confident, but I have the confidence that it's going to break it because price is actually reversing. If you look here, right now, this blue lines that you see them are my resistance and support levels, right? So I didn't just draw them now. These lines were drawn from last year, right? So it actually helps me to what? Be monitoring where price could actually reverse or continue, right? That is what I use. And then if you have observed, whenever price actually gets to this levels, there's some kind of reaction. You will see that in much expression on the smaller time frame, right? So this is the weekly time frame. Now let's move to the daily one. Daily one. The daily one. Now, if you look at the daily time frame too, right? We are still in a what? An upward trend. Generally, we are in an upward trend. Here, we are moving. We are moving. Even if I should draw a trend line, a support trend line here, you see that price is actually what? In an uptrend. We are moving. Now we are still in that fair value gap. And now this fair value gap, once again, is a bearish one, right? It's a bearish fair value gap. Yet there's another confluence that I use in my trading, right? There's this shape. that I use in my trading. And I can tell you that it works for me like 70% all the time. 70% all the time. A trend like this, a shape like this in the market actually works for me like 70%. I can even say 80% of all the time for me. So when a trend is like this, let's say price move from this level, right? It moves up, right? Then there's a small consolidation, right? When the consolidation here doesn't happen for too long, right? If it doesn't happen for too long, price has a higher tendency of what? Continuing with the trend, right? I will show this in another video, not a weekly video, but I'll prove to you, show a number of reactions or simulations, right? A situation whereby this trend actually what happened and then they work 80% of the time, like 80%, 80% most of the time. So this is it. So here, move, here, move. So market moves up massively, it has a higher momentum. Then there's some kind of consolidation. The market will rest for some time. And then normally when it happens, the following day, it gaps up again. This is what happens. So that's why I'm saying that even though we are in a fair value gap here, right, in a fair value gap, and then we can see that in this fair value gap, price has taking a longer time, because normally in the fair value gap, if you study the market, in the fair value gap, when price gets there, they don't stay there for a long time. Bear that in mind. In fair value gap or within fair value gaps, when price gets to that level, they don't stay there for a long time. At least, in fact, at most 3 candlestick patterns will form there, and then the price will move down. Sometimes even 1 candlestick can even get to that level, and then it will be rejected massively. But when you got to this fair value gap area, the region, price has actually consolidated there for a number of days. Bear in mind, this is the daily time frame. So if you are supposed to count, or if you should count this candlestick pattern, you are getting what? Candlesticks 1, 2, 3, 4, 5, 6, 7, 8, meaning more than 1 week, 8 days in that consolidation, and it's taking a longer time. Now, currently, looking at this candlestick pattern, even though it is what bearish in nature, right? In terms of anatomy, this looks bullish for me, right? You understand? It looks bullish for me because prices is closing a bit higher at a higher price, right? That is what I see now. And then generally, if you look at this market structure, it is in an uptrend. Now, don't forget that here there's some kind of doubt, or yes, a kind of doubt here, because there's a resistance just around this place, right? Look at this place, this point. Price got here, there's some kind of reaction. Price were rejected down, and then we are going back to this level again. Now, price could what? There could be a double button here, right, where price will be rejected. But I am telling you that here the price is generally in an uptrend, and I have much confidence that price would what? Break above this level. This level. Now, we don't trade daily time frame unless we are a swinger or position trader. That's when you enter trade here, right? So we will appreciate this whatever I'm saying here in much expression when we move to the lower time frame, right? So that is it. So in the course of the week, be watching this reaction, be watching your trading view, watching how price move, how they react to this level. Even though whatever I'm saying is not 100% sure or accurate, I have the confidence that price will break above this bearish fair value gap, and then even resist this resistance level. But bear in mind, it could take some time. This could actually happen maybe on the 3rd day, that's Wednesday. or maybe Thursday when there is a fundamentals happening, right? So that is it. So you should be watching out for this. So generally, I am expecting a bullish what DXY, but I will do that with much caution, right? Proper risk management. So that is it. It doesn't mean I may not, or I will not enter sell trades. But if I'm doing that, I'm going much with much lot sizes, right? I will manage it. But my general overview is that VXY will do what? Will be bullish. Will be bullish. Sorry. Now let's move to the 4-hour time frame. So whatever we are doing, that if you can see that there is some kind of what correlation, right, between the time frame. So far, whatever we are seeing so far is like all the time frames are what bullish in general, right? The trends are what in an upward way. So that is it. Now, when you look at the 4-hour time frame, here we are still in the what? The fair value gap, right? And market is still ranging, right? So I know for sure that this is the place that we, as a day trader, we start to enter trades, either for the 4-hour, 2-hour, 1 hour, 30 minutes, or maybe 15 minutes. So if you are trading, right? So this is where we are going to be cautious and know when to enter or not. Now, I would advise that at this area or at this point, don't enter into any trade. If you are already in a trade, you may leave it. But if you are not in any trade, don't enter into any trade here, because we are still within the fair value gap and market is still ranging. So wait for it to what? Break out and then do that. I know for sure someone might be what aggressive trader, right? I wouldn't say anything about that. If you're aggressive trader, you can maybe just when market open, maybe Monday, you can what start by what entering what sell orders on either GU, that's pounds USD, or Euro USD, or Australian versus the USA dollar. You can be doing what your sell orders, right? And that is it. And then maybe on USD card, you can be what buying, because the pair here is USD stroke XXXD. So that is it. So you can do the opposite in that sense. So it means that if dollar is buying here, the American dollar is buying here, that means USD card will also be buying, because the pair there is what USD stroke XXX. The XXX could be any other kind of currency. So like I do always, I'll put that trick in the description so you understand what it means. When the light is going up, what happens to the corresponding what pairs or the currencies. That is it. So here, this is where we actually enter trade, right? We have seen in the weekly time frame that we are expecting market to be bullish, the daily bullish, and then in the 4-hour, that's where we actually enter trade, right? So here we are still within the fair value gap in that consolidation area. So I once again advise that if you are not in a trade, please don't enter into any trade. Don't enter into any trade. If you are going to do that because you are aggressive trader, then please check your risk management. Please check that. Don't bet on trade, or don't enter bigger lot sizes. So please bear in mind of that. Now let's move to the 1-hour time frame. Now, once again, in the 1-hour time frame, we are still in the consolidation. We are still in that fair value gap, the bearish fair value gap, right? So when market opens, one thing I've observed that when market opens freshly, the normal direction that the market is supposed to go, it will not go in that sense. So let's say, even though we are okay, like we said, we are expecting the DXY to be bullish, right? Now, when market opens around midnight, it will behave as if it's going up a bit, right? And then it will pull back again. Now, when it pulls back, it will gather some kind of momentum, and then it will gap up massively. So this is what's going to happen. Let me give you that in terms of data. So it's going to be like something like this. You see, something around this place. It will come to retest, right? And it will go up, right? Massively. That's what it's going to be. It's going to be like this, something like this. You can come out, watch this, maybe on Tuesday, or maybe even within Monday. On Monday, you can still come and do this, check this. This is how it's going to be. It's going to move like. It moves something like this, continue, come back for a retest, and to gap up. So even if you want to enter a trade, I would advise that don't enter now. Wait for a pullback, something of that sort, and then go up. Or better still, even wait for it to actually break out of this zone, out of this zone, out of this zone entirely. That is my advice. So in a recap, I'm expecting DXY to be bullish, having a bullish week, right? A bullish week. DXY is going to what? Buy. In fact, American dollar is going to what? Be bullish. Is going to buy, and then the corresponding price will be what? Will be selling. So that is what I am expecting. So please, even though I've said this with my this is just a forecast, right? This is my bias. This is what I think. This is my view, right? So compare that with whatever you know. But if you are amateur and maybe you are new and then you are still learning, then you have to confirm this with my previous videos, my previous analysis, and then you can have some kind of what confidence in my setups, and then we trade together to be what profitable. So there's one thing that I want to say, that if you believe in my analysis and then you think my analysis is good, then I want you to benefit much more. I'll put a link, like a broker link in my description, whereby you can do corporate trading. So what corporate trading is when whatever signal, whatever entries that are entered, it will automatically be entered onto your accounts, and then if I win, you win. If I lose, you lose. So that is what it's going to be like. Right. So thank you very much for being with us. Please like and subscribe to our channel, and then have a happy trading week. Thank you very much. Bye for now.